And I will share my screen. Okay, can everyone see the slide?
Yes.
Yeah.
Okay, good. So go ahead, Johnson.
Hello, everyone. Welcome to DeFi Toronto September edition. My name is Johnson. I'll be your MC for tonight. And we have a pretty interesting lineup today. So let's get started. Next slide, please. So just a bit of about DeFi Toronto while the slide's changing. DeFi Toronto, like we've been here since 2019. We've been hosting like regular meetups, and through the bull or the bear market, like we continue doing analyses and showcasing projects that have a lot of potential, so that we're in this space for the long term. And it cannot be more evident because we are not partying today at Elevate. We're rather hosting a DeFi Toronto event with serious DeFi stuff. So without further ado, here's the team comprised of 6 members, 3 of which are present today. Aleem and Imran are 2 of the founding members, along with Victor, Mark, and Safia. I joined in a bit later. So why don't we start with introductions for Victor?
Hi, everyone. Welcome. I know many of you know me, so I'll keep it short. You know, I used to work in the traditional finance industry, in particularly pension fund investment, and I started to get into the crypto space in 2014. And we found this DeFi Toronto meetup in the fall of 2019. Now we have, you know, over 2,500 people. We host an event every month, once in one in-person event in every quarter, and then twice online. I also teach a course at Duke University. That's why you can see my background is Duke University. Is one of the postgraduate certificate program in blockchain development. So anyone interested in specialized in blockchain development, York University have this 1-year program. So is George Brown also has a similar program. So that's a little bit about me. And also I currently work as a researcher for a crypto hedge fund called Foreign Capital. I do fundamental research on the blockchain and the tokens. So we'll pass on to Mark.
Yeah, thanks, Victor. Hi, everyone. So I'm Mark Lejour. I started my career in education and moving to innovation. I'm helping entrepreneurs and startups innovate through permissionless innovation. And I'm advising on a number of groups here. And I'll be teaching also as well at the MBA, the strategy course and digital transformation at International Business University. It's a university, private, non-profit in Toronto. And Johnson, I'll pass the mic back to you.
Thank you, Mark. Hi, everyone. I work as a marketing specialist for Virgo CX. We are one of the few regulated crypto trading platforms in Canada. And as part of marketing, what I really think of it is like propagating crypto education, because that's the biggest piece that needs to be solved today. And that's what I'm building my career on. And it's my pleasure to be part of the DeFi Toronto team to even volunteer for this and promote crypto education. There's not been a better time than now for that. So let's move further into the agenda. We've got a pretty packed and interesting agenda today. We have the DeFi news recap that's headed by Victor and Mark in the beginning. I had a slight sneak peek into the DeFi news recap, and I can tell you it does not disappoint at all today. It has loaded with a bunch of very, very interesting information. And then right after that, we have three speakers with very important topics. First on insurance, DeFi assets, how do you protect them? Second one, Bitcoin native DeFi. Is that possible or is it not? And how far along are we on there? And then the third speaker after the break in community announcements we'll have is on decentralized communities. How do you build them before you develop your DAO? Because at the end of the day, dApps are decentralized because of the communities that drive them. So without further ado, let's kick it off with the DeFi news recap. Oh, surprise, surprise, there's a book launch. Is Alex in here today, or?
No, he couldn't make it at the last minute,
Okay.
but he has a shout out. So for those of you who know Alex has been working at the Blockchain Research Institute along with Don Tapscott of international fame. They've been writing and researching about blockchain and writing a number of books. Then the second one. So Alex is on the book tour. I'm sure you've already seen the news about the book on the social media, and I think it was on the top 10 on the Washington Post, or one of the leading publications in the US. I just saw that very quickly. So here's a shout out, and Alex couldn't make it today, but he'll eventually come back some other day, I'm sure, to talk about this. So moving on to the news updates, we're gonna try to keep it tight because we have a number of speakers today. So my main point today I want to share with you, there were a number of conferences this September, and I had the chance to attend permissionless. I had to make a tough choice because there was Token 2049 at the same time, can't be everywhere. But it was a very well produced conference in Austin, Texas. With great speakers. So a couple takeaway for you. Number one, don't miss the keynote from Eric Voorhees. That's absolutely stunning, fantastic keynote. He really set the stage for the entire conference. All the videos, there's a link there at the bottom. They are available on Vimeo. So you can watch the main track and you can watch also the 3 tracks like Future of Finance. You have all the new KeyCast protocols and also the institutional and cultural tracks. I was very interested, moving on to the next one, very interested by regulatory discussion with Tom Hammer, actually. It was actually give us some glimmer of hope on the regulation on the US side, and actually cracked a number of jokes and make the audience smile more than a few times. I found the institutional conversations on the track very, very interesting. So I cannot really put everything in there, but the one on the right, for example, about the macro positioning and how the macro and crypto interact together was fantastic. Some of the highlights: L2s, tokenization of, especially tokenization of real world assets. And Victor is going to talk more about this. Were definitely key themes. Also reminding the audience that there are actually real projects that have been going on for a number of years. There was Christine Moy from JP Morgan. I was there. I was also reminding a few people. And you could see the big heavyweight like Amazon Web Services were there. Franklin Templeton, there were some conversations about the Bitcoin spot ETFs. So I will just leave it at that. Watch the videos you want. Frankly, it's a good investment of time. We always do, and I'll always love to take like put a slice to remind everyone that DeFi is the most hacked use case on the crypto space. So of course you have like no shortage of hacks. Funny enough, Vitalik's account was hacked, of course, during the conference. So that's always give you some good topics of conversations. Moving on to the next one. I think we're moving to, so that just came up actually online. I thought that chart was fairly interesting to show a little bit, because layer 2 are big. Everybody's talking about layer 2, but this actually chart shows the distribution of ETH and where ETH falls into that in terms of actual real coins. So I leave you to meditate on that one, but you can see it's actually I won't comment the chart and just move on to the next one to keep things moving. Another interesting thing is the world of stablecoins. There are many stablecoins. There was a conversation at KPMG earlier this last week, I think, that they mentioned this report. Maybe one of the biggest takeaways, and there are several takeaways, is look at the transaction volumes between Visa and the stablecoins. So stablecoins, they come up as actually a very serious cross-border payment approach, and maybe there will be we'll bring some more speakers in future DeFi meetups to talk more about this. Moving on to the next one. Yeah, so that's the stablecoin supply. It's been fairly steady, and no sign of really moving down from here to the slide is a little cut. I hope you can see it fully here on my end. And we're missing the right part, but moving on to the next one. And I'll leave it to Victor to go a little bit deeper on those numbers and the real world assets in particular.
Thank you, Mark. Everyone can hear me?
Yeah, can hear you.
Okay, so I saw this chart. So this chart on Twitter, a post by Ultrasound Money account, and I find it very interesting. So over the last few years, we have Ethereum, but then there's a lot of competition. Want to be like Ethereum, but do better, faster, cheaper. But one way to measure whether they're able to compete with Ethereum is to look at the total value lock, and how many of them are on Ethereum or Ethereum virtual machine compatible chain. And on DeFi Llama, they actually track this, and then you can see among the top 9 network, the top 8, they are all EVM or EVM compatible. Solana is not, but Solana, if you look at the total value lock, is very small, only $300 million. So looks like Ethereum, the EVM has really won the competition in terms of as the underlying engine to drive the network. Okay, so another thing related to Ethereum is that there's many layer 1 blockchain, but some of them are very small. And for small chain, they're facing some challenge. If you remember blockchain trilemma, right? There's a security, scalability, and the value price. So if you're a small chain, you're facing 2 challenges. One is that you may not have enough liquidity activity on your blockchain, on your chain, on your network. And the other issue is that if you don't have a lot of network value, means that your economic security is much lower. That means that attacker can find it easier to launch a 21% attack. In comparison, that like Ethereum, like Bitcoin, that have very, very high economic security, means that attacker have to spend a lot of money in order to launch 51% attack. So some of the small chain decide in recent months to migrate to become the layer 2 of Ethereum. So they basically delegate the network security to Ethereum. They focus on their application, their unique value proposition. These charts to show you that the Ethereum layer 2 has grown substantially. So whether from total value lock or number of transactions per second, you can see that the layer 2 really live up to their original mission. The mission is to scale up Ethereum, the mainnet transaction. And now the scaling factor is 5.6. So that's really fantastic. And you can see that the growth has really exponential in the last year to year and a half. It's really good, especially Arbitrum. And since the launch of Arbitrum, that's really pushed the growth on the layer 2. Another interesting news is that the formation of asset tokenization, the tokenized asset correlation. So it's like basically industry association, and the founding member are mostly centralized crypto company, but we also have some decentralized one like Aave, like Base. Base you can debate whether it's really decentralized or not, but my understanding the underlying protocol is decentralized, even though it's funded by Coinbase. And they are going to push for tokenization of real world asset. It can be financial security, can be private credit, can be U.S. Treasury, real estate, fiat currency. Mark talked about a stablecoin. One of the main early use case of blockchain is tokenized fiat currency. They become the stablecoin like a USDT or USDC, and there's many benefit that you can bring by tokenize some, improve liquidity. You allow fractional ownership on real estate. You can add programmability to the asset, all sorts of things. So there's a lot of benefit. And on the survey done by BNY Mellon last year, a majority of the people agree that tokenization really going to bring out a positive efficiency and other good benefit to the industry. And then here's just a little table to show you that there's number of platform doing tokenized private credit. And interestingly, you can see that most of the platform are actually run on Ethereum, but we do have some exception like a Solana and Polygon. Well, Polygon, you can say, well, it's kind of a side chain to Ethereum. And currently, the tokenized credit yield is about 10% APR. And then another popular use of the use case of a tokenization is U.S. Treasury. So you can see that we have over 600 million tokenized U.S. Treasury currently on blockchain, and mostly on the Ethereum and Stellar, but also a little bit on Polygon. And I look into the company who tokenize U.S. Treasury. There is two big name, Wall Street big name on the list: Franklin Templeton and WisdomTree. They are, you could call them the traditional finance heavyweight, and they are tokenized U.S. Treasury. Here's a chart that Mark found quite useful. So KPMG, apparently they track the growth of a tokenized asset, and looks like public security, whether it's equity or debt, has grown this year so far 35%, and followed by private security, private debt, private equity. And so it really validates my view is that perhaps after DeFi, after NFT, the next growth driver for the ecosystem perhaps is the tokenization of a real world asset. And well, this week the big news is always about whether we get approval of a spot Bitcoin ETF or Ethereum ETF or not. And there's a bipartisan push to ask the SEC to approve spot Bitcoin ETF. We'll see whether who will prevail. So this could be a catalyst for the mainstream adoption of digital asset, crypto assets for the institutional investor. So keep eyes on this development. And finally, here's an interesting ranking done by Chain Analysis, and they, based on their criteria, they find, you know, the country has the leader in crypto adoption is actually in Central and South Asia. The number one is India, then followed by Nigeria, Vietnam, and the US is ranking is pretty good too. US ranked number 4. Unfortunately, Canada is ranked quite low, 19. So some interesting study done by Chain Analysis. Okay, so that's the end of our DeFi news recap. And so I'm going to stop sharing the screen, and then I will introduce our first speaker. Okay, so our first speaker is Kacper Bak, who is the Chief Information Security Officer at Chainproof, which is an insurance company for the Web3 company, for the Web3 industry. And he's a founding senior engineer at Quantstamp, and also a senior engineer at MathWorks. And he's actually a graduate from University of Waterloo. He got his Ph.D. in computer science. So we're really delighted to have Casper to tell us about their company, their insurance business, and particularly how that benefit the Web3 development. So I'm going to pass on to Casper.
Yep. Thank you very much for the invite, and happy to be here. Should I try sharing screen right now?
Yeah.
Okay.
Yeah.
See,
I just made you a host, so you can share.
Can you see my screen right now?
Yes.
And can you see right now, or like, is it a new slide or is it frozen?
No, yeah, okay. I can see your first slide. Yep.
Okay. Okay, awesome. Okay, so I'm going to talk about 2 projects that we've been working on. So the first one is Chainproof, which is a company that offers insurance for Web3 applications for institutional customers. And the other project is from Quantstamp, on the other hand, and offers DeFi Protection for retail customers. So the difference is that Chainproof is an actual insurance, whereas Quantstamp, the product that Quantstamp offers, is not an insurance product. So just wanted to make this clear. So as you already showed in one of your slides, like hacks are on the rise, and of course the value of tokens or crypto assets stolen or locked just keeps increasing, and it's not slowing down. So that's one of the problems. And actually, this number that we are seeing here is already outdated, because there have been a few significant hacks that happened after May of this year, and you know, like seeing that security is has such a big impact on your assets. Makes a big difference for institutional customers, because in traditional finance, if things go wrong, there are some ways of clawing back your digital assets, whereas with blockchain, once a block got finalized, it's very, very difficult to get it reverted. Like, basically, we are talking about like doing a hard fork, which almost never happens in practice if a project gets hacked. So to address this issue, we created Quantstamp, and as far as I know, Chainproof, which is a company that got spun off of Quantstamp. And Chainproof, as far as I know, is the first regulated business that can offer insurance for dApps. Here we focus on smart contracts, and we also focus on insurance for slashing. So we are licensed by Bermuda Monetary Authority, BMA, and Bermuda is one of the countries that attracts the most insurance companies. And it's been my first time in my life to work with regulators, and I must say, actually, it's been pretty pleasant. And on the other hand, we are also working with regulators in the US, and also very, very, very pleasant. It doesn't mean that it's easy. Actually, it is a lot of work, but the regulators are really they seem like they're there to help. So you know, I'm maybe surprised a little bit, but it's a very, very positive phenomenon. So Chainproof was incubated by Quantstamp, and we started Quantstamp in 2017. Quantstamp is a crypto security company. We provide security audits. And why does it matter that these two entities work with each other? So if you offer insurance, you would like to assess, the probability of getting hacked. Also, you'd like to assess the premium that you should charge. And Quantstamp has technical resources to do the technical and business due diligence. So by business, we mean like how legit this company is, how legit are the founders, and so on. When it comes to technical due diligence, then we talk about the actual security audits. And depending on the nature of the project, we definitely focus on smart contracts. But if we insure, for example, against some slashing events, then we look into the off-chain software as well. So we want to be very, very thorough with our audits, and that's the reason why, for example, Chainproof can offer much lower insurance premiums than regular insurance companies. It's because we can do this technical diligence and we can assess the risk very, very in a very detailed way, unlike regular insurance companies who don't always have the necessary expertise. And before I learned anything about insurance, I didn't know that if you have an insurance business, you actually need insurance for your insurance. So this is what the reinsurers do. And Munich Re is one of the largest companies of this type in the world, and they are a reinsurer for Chainproof. So the reinsurer, they can share some of your losses, but they also act as a stopgap, so that if something really, really bad happens, then the insurance company doesn't need to go bankrupt. And so far, Chainproof had one very significant investor, which is Sompo. And Sompo is Japan's second largest insurer. So this is briefly speaking what Chainproof is. So as of now, we have a few production-ready insurance policies. I'm pretty sure that you know at least some of these projects, so like Uniswap, Maker, Compound, and we picked these projects first of all because they're very popular. Second, also because we did audits for actually for all of them, and we could assess the risk.
Casper, so those names you put a Maker, are they already insured by you, or is that going to be insured by you?
No, we do have we do have policies right now. So we do have institutional clients that for example, use let's say Compound or Uniswap, and we do offer insurance for them on these protocols.
Oh, okay. So it's the institutional company that insure, not those protocol, like not MakerDAO buy insurance from you.
That's right. That's right. Right now, like, so if you have a company that wants to use Uniswap, but you'd like to have insurance, then that's what we provide. So it's not like we insure all of the Uniswap customers, but one specific customer that wants to buy a policy. But of course, you know, you can imagine a project that would like to have a policy for all of the customers. But it is a possibility. We don't have policies right now like that, but I can definitely imagine that in the future. But one important thing to mention is that as insurance is a very regulated business, we have to go through KYC, which is know your customer, or a KYB, know your business. And we can only insure entities that are you know, legitimate, and they are not on the sanction list, and so on.
It's Lido. Sorry, Casper. I noticed Lido is on your list on the slide here. How about Rocket Pool? They're also decentralized staking platform. Is Lido's insurance policy applicable or similar to Rocket Pool? If you have.
I don't recall having a Rocket Pool.
Okay.
And also the one thing to mention is that if you have one project that is similar to another one, let's say it is a fork, what we ensure is a very specific deployment. So the deployment that we audit. So, like, for example, like if we know, like the contract, let's say Uniswap comes, like, okay, a client wants to insure for Uniswap, then we would review the code for a specific commit, and that must be the commit that is deployed on the blockchain. And if there is any update to the protocol, we would have to review this update before continuing the policy. And actually, it matters a lot. Like even recently, well, maybe not that recently, but a few months ago, there was a hack on one of the bridges where before the update, the code was audited, and it was marked, and all of the issues were, you know, like marked as, I believe, fixed. Everything was okay. But then the team updated the code, and they updated some of the smart contracts, and that code was not audited by anyone. So nobody reviewed besides the developers. And unfortunately, a hack occurred, and that was a very, very significant hack. So this is why whenever there is an update, we would request an audit for the diff. Hope that makes sense. And like when it comes to those insurance policies, they are very, very specific, like in terms of the things that are covered and the things that are not covered. So, for example, what is covered is if we do an audit and we miss some of the errors or vulnerabilities, then this is covered. Also, when we do an audit, we request the protocol to fix the issues. And if they don't fix the issues, then of course we cannot ensure that, because like we know that there is a vulnerability. Oh yeah, actually that's it. And then like when we review smart contracts, then there are multiple things that we check for, like accounting, access control, like how oracles are used. Whether, for example, you check that the value that you get from the oracle is not outdated. We also check for, you know, like potential sandwich attacks, flash loans, reentrancies. So there's a whole list of issues that we check for, but this list is not static, because every protocol is a bit different, and every protocol has a bit different vulnerabilities. That's why we have humans that need to review the code, and not just programs that can flag some of the issues. Now, to be specific in terms of exclusions, so definitely we exclude code that was not audited by us. We cannot also include rug pulls and governance attacks, attacks on front ends, and so on. And these are very reasonable exclusions, because we always assume that everybody must act in their good faith. So that was insurance for smart contracts. The other type of insurance that we offer is for slashing events. So imagine that you have that you want to run a validator, and you'd like to provide some stake to secure, for example, Ethereum. And then there might be reasons why your stake could be slashed. We focus on professional validators. So typically they would run like hundreds or thousands of nodes, and we would perform an audit on them. And that would involve mostly an audit of their infrastructure, their deployments, their scripts. And we cover some risks, like, for example, double signing or slashing to downtime. And it is worth mentioning that those different risks and the events may be dependent on the network in which the validators participate. So I'll go quickly how insurance works here. So you have typically you would have a validator of some Dapp, and you would have a developer of some Dapp. They would request an audit. Then Quantstamp would do the audit. Then we would deliver the report, and then developer should fix the issues. And if necessary, we can go over a few runs of that. And once we get the issues, we can deliver the final report. If we check everything is okay, then the institutional customer can come to us, and if they want to use the platform and get it insured, then Chainproof can provide that. So Chainproof already gets the report from Quantstamp, and Chainproof, besides having the report, also introduces a real-time monitoring of the given protocol and for a given client, and that goes on in real time, so that if there is any incident, we can react as soon as possible. And then we can let the client know what to do, and perhaps work with the client. And that's how we provide this coverage. And in the meantime, Chainproof, of course, works with the reinsurer, and the reinsurer provides this 50% quota share for a given policy. Now, if there is some claim, then the insurance buyer would come to Chainproof. The Chainproof would work with Quantstamp to investigate the claim. And then we would get the Chainproof would get the report. And if the report is legitimate, then we report the claim to the reinsurer. The reinsurer refunds the claim or declines it, and then that gets forwarded to the insurance buyer. So this is our team, and I'll move on. Any questions? Okay. So that was insurance, and I would like to move on to DeFi protection product. So DeFi Protection is a bit different. So this is a product from Quantstamp, and I think a proper way of thinking about DeFi Protection is more of a warranty. So this is a product that is offered to retail customers. So imagine that you use some DeFi protocol, like for example Compound or Aave or Curve, and you can actually buy protection for it. Like first, you need to go through the KYC process. We do that through Quadrada, and typically it's very quick. Takes about 5 minutes, and it's very thorough. And currently, we focus on customers located in the US. So here, for a specific protocol, you can choose like one of the networks. Then you would specify like how much you would like to protect, and then for how long. And what also matters is like how quickly you can respond to us if we let you know that there is an incident going on. Because if we know that there is an incident and you can be committed to withdraw your funds within 5 minutes, then the premium would be much lower than if you can commit to, for example, 24 hours. Because a lot of the hacks, they happen very, very quickly on the blockchain. Yeah, then here, before finalizing everything, you would pick like one of the channels where you'd like to be notified about potential incidents. And here is a summary of your premium. Then you would just sign. And the signature actually happens through your wallet. And finally, you make a payment. Okay, boom. Looks like this demo is not working well, but anyway, perhaps I didn't have enough USDC. But basically, like once you, but that would be the last step. Once that's done, then here you would have a list of your protected protocols. So this one is still a mockup. It's not a live application, but this is pretty much it. And if there is a claim, then Chainproof and Quantstamp would actually it would be on Quantstamp. So Quantstamp would investigate that and would provide the refund for you for the chosen protocol. So this is it from me when it comes to these two projects. We are moving pretty rapidly, and we are really excited about them, because I believe like we can bridge this gap between traditional insurance and Web3, and I believe we can provide much lower rates than traditional insurance companies. Really, I would like to thank you very much for inviting me here and for your attention. And yeah, if you have any questions, I would be happy to answer them. I just stopped sharing. I should make you okay, you're a host now. Okay.
Thank you, Casper. So for the DeFi protection, I presume that the buying the insurance tend to be people do DeFi yield farming.
Probably, most likely, given these protocols, but it also depends on which protocols we include there. But yeah, probably yield farming would be a big use case for that.
Mm-hmm. Well, for crypto institutional investor, hedge fund, there's any use case for them?
I think that probably those clients would prefer to go through Chainproof, I would imagine, because Chainproof can work with much higher quotas. And yeah, so definitely the quotas and the premiums that Chainproof offers, they focus on institutional clients, whereas DeFi Protection has much lower limits and it's more of a warranty product for whatever Quantstamp audits, and it's mostly focused on retail.
Thank you.
Thank you very much.
Thank you, Casper. So without further ado, I'm going to introduce the next speaker, and after that, we're going to break, and we have a third speaker. So please stay tuned. So it's my great pleasure here to introduce you to Tony K. Tony is actually a former colleague at Consensus, so good time there. I remember these young people coming from University of Waterloo. That was they passed us like really fast actually now. So Tony is the CEO and co-founder of Atomic Finance, a company working on Bitcoin native DeFi products. The first product allows Bitcoin holders to generate a return on their Bitcoin using a non-custodial covered call strategy. He's a self-described Ethereum turned Bitcoiner, so let him explain what that means exactly. He has strong opinions on the matter. And he started in the space working on ETH DeFi before pivoting to focus on Bitcoin first products. So Tony, you might actually be the first Bitcoin driven person here on the DeFi meetup. So we're all very curious to hear what you have to say.
Awesome. Well, thanks for the invite, Mark. I really appreciate being able to be here. Yeah, excited to kind of dig into it. So let me just, I guess, start sharing my screen here. Victor, could you give me some share access? Okay, there we go. Sweet. Awesome. Cool. Let's see. Are you guys able to see that? Yes, yep. I think so. Okay, great. Sweet. Yeah. So I'm here to talk about Bitcoin native DeFi and why I'm super excited about it. And so first of all, before I start, let's start with a little bit of audience participation. I was curious, like, so who here has actually used DeFi with Bitcoin in some form or fashion, like, you know, WBTC or TBDC, something like that. Who here has used DeFi with Bitcoin? Sweet. I see a hand there. Cool. Awesome. Well, yeah. So, and who here has actually used DeFi with actual Bitcoin, like plain old unwrapped Bitcoin, boring old Bitcoin? Guessing not going to be that many hands here for this one. Sweet. Cool. Well, that's what I'm going to talk about. And I'm going to talk about how that's possible and what we're building on top. So when I talk about this stuff, Bitcoin native DeFi, one of the first reactions I always get is like, what? That's even possible, right? Like, you know, a lot of the narrative around in crypto around Bitcoin is that, hey, Bitcoin, you know, it's this thing that you can buy and you can kind of hold, but you can't really do much with like outside of that, right? It's kind of like this boomer coin. It's this, you know, pet rock that we just like, you know, hold on to, can't do much with it. Well, turns out you can, and kind of like just like what the Ordinals movement has shown us earlier this year around how, hey, you can actually use Bitcoin's native properties to allow for things like NFTs on Bitcoin layer 1. Well, you can also use the existing functionality of Bitcoin to actually start doing DeFi functionality. And so we'll talk about how that's possible. Sweet. So yeah, it's a problem as old as time in terms of DeFi on Bitcoin. A lot of us know, okay, well, Bitcoin's the largest crypto, it's the most trustless space layer, it's the most decentralized, but there's no DeFi on it, right? So what have we had to do as Bitcoin holders? Well, we've had to use things like CeFi, centralized finance. We all know there's BlockFi, Celsius, Voyager, FTX. And in turn, you know, that has obviously exposed a lot of Bitcoin holders to rug pulls and counterparty risk. In fact, last year when we did the math, turns out that basically like a total of around $20 billion worth of crypto are missing just due to centralized finance entities blowing up. $20 billion. Now that's basically the size of the GDP of El Salvador. And us as a space, we can't really afford to basically lose that much money every couple of years, right? And so we have to kind of find different ways to be able to, hey, ask ourselves, how can we make a better system? How can we actually build some more robust, non-custodial and transparent financial tools for Bitcoin? Because if Bitcoin is going to become this financial asset that's adopted by the world, well, it has to have robust financial tools. Right now, that's not the case, and we don't have that yet. So what's the best solution that we as a space came up with so far? Well, we came up with Wrap Bitcoin, another custodian product, right? It seems like we really love custodians in Bitcoin, don't we? It seems like we can't get away from them. And with Wrap Bitcoin, it's another system where you have to trust, some entity and not code, right? You have to hand Bitcoin to BitGo. You have to trust them to hold on to it. And in return, they then mint some WBTC on ETH for you. Well, you have to trust BitGo that they're holding onto your keys. They don't mess that up. And, they're not doing anything malicious with your Bitcoin, right? And at the end of the day, what is WBTC? Well, WBTC is just a claim on Bitcoin that BitGo actually controls, right? You have that claim and you can redeem it for one real Bitcoin. You have your WBTC and you can redeem it for one real Bitcoin. But at the end of the day, it's not Bitcoin, right? It's an IOU, it's a claim on Bitcoin. It's kind of like a coupon at a store, right? You have to trust the store to make good when you're trying to redeem that coupon, right? And as we know, sometimes the store will tell you, hey, you're not eligible for this promotion because X, Y, and Z, right? Sometimes the store won't make good on that redemption. And you have to kind of trust the store to make good on that coupon, right? And so it's the same with BitGo and WBTC. You have to trust that they're going to make good on that coupon for you. And at the end of the day, there's not just custody risk, there's regulatory risk, right? Custodians are always going to be centralized pressure points for regulators because custodial Bitcoin is easy to freeze Bitcoin, right? It's much easier for a government to knock on the doors of one company, one custodian, and seize Bitcoin or freeze the Bitcoin versus having to knock on the doors of all the different millions of Bitcoin holders around the world. It's always going to be easier if it's just one entity holding that Bitcoin that the government needs to hit up. And that's not even to mention the price, right? At the end of the day, one WBTC is not equal to one Bitcoin, right? WBTC is not Bitcoin. And so what happens when there's fears around BitGo's solvency, or if there's, worries about the Bitcoin backing the WBTC? Well, the price can wobble. And in November 2022, when we saw FTX go down, it was revealed that there were ties, right, between Alameda Research and WBTC. It turned out that those concerns were not legitimate. But at the end of the day, the market was worried and the price, WBTC went off its peg, one-to-one peg in terms of price with Bitcoin. And when it comes to financial tools, we all know price matters. Price stability matters a lot, especially when it comes to things like futures contracts or options contracts. So, we have to kind of ask ourselves as a space, is this really the best system that we can come up with, right? And it turns out that it's a question that a lot of us have asking ourselves in the Bitcoin space, including this guy. His name is Todd, and he was one of the co-writers of the Lightning Network paper. Basically, the question that he asked himself back in 2015, 2016, as he was working on Lightning Network, was, well, what if there is a way to do financial primitives on Bitcoin itself? What if there is a way to do non-custodial finance with Bitcoin and without having to do all this pegging and wrapping and all that kind of stuff, right? And so the concept that he came up with was discrete log contracts, or DLCs. What are DLCs? Well, basically, DLCs allow you to tap into Bitcoin's native properties to enable for peer-to-peer smart contracts on layer 1. There's no need to wrap, there's no need to bridge, there's no need to peg to another chain. And what's cool about what's cool about DLCs is that it's actually non-custodial. It actually allows for non-custodial financial instruments. With WBTC, people call it DeFi, but I really question that because at the end of the day, it's a custodian at the back end, right? And so if that custodian acts maliciously, or if the custodian is compromised, well, the underlying Bitcoin could be at risk, right? And what's the point of DeFi if it's not custodial? If it's custodial, right? And so at the end of the day, DLCs are a way that actually enables things like futures contracts or options contracts or binary options like bets that can be encoded on chain, and where folks only have to trust code rather than a custodian. Number 3, regulatory crackdown. Well, I talked about that case. What if the government knocks on BitGo's door? Well, there's no custodian here to knock on the door for. There's with DLCs, it's you and your own keys. There's no custodian in the middle. And there's no more custodians that can act as that centralized pressure point that regulators can come to. And of course, with DLCs deal with plain old Bitcoin. So one Bitcoin is always equal to one Bitcoin. There's no issue around price stability or the peg being off or what have you, right? And of course, as we all know in this call, DeFi protocols get hacked, and they get hacked often, right? It's just another day in DeFi when that happens. In fact, it happens so often that we get desensitized to it. It happens so often that we've now spun up an entire insurance industry around it, like Casper talked about earlier. And so that's where the primitiveness of Bitcoin, that's where the simplicity of Bitcoin script works to our advantage. Basically, with Bitcoin script and DLCs, there's a lot smaller of a surface area for attack. And that's the really cool thing about DLCs compared to ETH smart contracts, because you just don't get that kind of honeypot attack because it's very simple. It looks like it's literally a multi-sig on chain with an oracle attached to it. And so that's the really cool part about DLCs. The not so cool part, or the trade-off, is of course it still relies on an oracle. So there's an oracle that has to report on some kind of real world event, whether that's, for a bet, that's the result of the Super Bowl, or like for an options contract for Bitcoin, that's Bitcoin price that an oracle has to report on. So there's always that sort of still centralized source of truth that the DLC does rely on. And that is the one drawback that is kind of still present within DLCs. DLCs don't solve that oracle problem. So what do we do, and what have we built on top of DLC? So Atomic Finance, what we've done is we've used DLCs and basically used it to build a non-custodial protocol for Bitcoin holders to be actually able to earn a return on their Bitcoin. And initially that's using covered calls, which is a type of option strategy. All this stuff is powered by discrete log contracts, DLCs. And of course, using DLCs, we're able to remove the counterparty risk and allow all parts of the process to be verifiable on chain. No more black boxes that CeFi has brought us in the past. How does Atomic Finance work? Well, we've taken DLCs, this concept of DLCs, and we've kind of used it to encode covered calls, or to use it to represent covered calls on chain. What are covered calls? Well, covered calls are basically a type of option strategy where you can earn returns or earn Bitcoin premiums in exchange for selling upside on your Bitcoin. The cool part about them is that it's very low risk in the sense that you either always end up with more Bitcoin, or you end up with a Bitcoin stack that's worth more in Bitcoin in dollar terms. And of course, there's no risk of liquidation and getting wiped out, but it's also not risk-free. There's never a risk-free rate of return in Bitcoin, right? And so with covered calls, the risk that you're taking is that lost upside in the event that Bitcoin does rise significantly within a short amount of time. And so how have we kind of like built up our product around DLCs and covered calls? Well, initially, what we've done is we've built passive strategies around DLCs. Basically, initially, one of the things that one of the feedback that we heard from our users was that, okay, well, this sounds nice, yield sounds nice, returns sound nice, but I'm not necessarily a trader. I don't want to be monitoring the markets, and options sound complicated. They, sounds like you have to kind of keep an eye on your charts, the Bitcoin price charts all the time. That sounds hard, right? And so basically what we've done is initially we built up passive strategies where it's analogous to an ETH DeFi vault, where basically it's kind of a one-click experience where folks can kind of start entering, that can enter this a passive strategy, and the kind of it does an automated covered call selling strategy in background, and basically that's dictated by back testing and kind of like Bitcoin back tested based on Bitcoin's price history and whatnot. Moving forward over the next little bit, we've also heard some feedback in terms of, okay, well, I am a sophisticated investor or trader, and so I do want to do stuff manually. And so moving forward, we're also going to kind of enable things like manual options, like being able to actually have full control and flexibility over, okay, what option am I entering? How do I want to basically make a spec call on direction? Or maybe in a bull market, I want to hedge my price downside, right? I want to ensure that I'm protected against a big dump in Bitcoin when I feel like, there's kind of shakiness in the market. And so that's the type of stuff that options enable. And I feel like for the average investor, like options are still pretty underutilized when they can be very, very powerful. Obviously, there's covered calls like that we've built out that allow for people to generate income. But like, also, aside from that, there's the ability to hedge against price downside risk or make speculative calls on direction. And so options are generally a very kind of powerful tool that are kind of overlooked by a lot of people just because it sounds hard or it sounds difficult. But basically, that's why we've kind of tried to build up a very simple UI UX to kind of wrap it around and make that whole experience simple. In terms of what we've done, basically, it's still early days, but what we've seen is, as folks try our product out, they get more familiar and they kind of start using DLCs for the very first time. They're kind of shaky. They're like, oh, what is this? I've never tried to use Bitcoin in this way. But as kind of time goes on, as folks get more comfortable, we've seen a gradual kind of increase in terms of Bitcoin total value locked on Atomic Finance DLCs, and we think that's only going to continue to go up moving forward. And it's not just us in this DLC ecosystem. There's now starting to be companies that are looking at using DLCs for lending. Lava is one of those companies where they're looking at locking Bitcoin in DLCs as collateral for a loan. There's also this company called 1010 Finance that are using DLCs to actually like encode perpetuals or futures contracts. And it's all just super exciting because there's now starting to be more and more builders that are coming to the DLC ecosystem and looking at, oh, actually there is a way to actually build DeFi natively on Bitcoin. And it's not, not all the DeFi is not just going to be on Ethereum or Solana or whatever. There's actually going to be the ability to build Bitcoin native DeFi. And that's kind of the game changer that DLCs are. So that's kind of the end of my presentation. But this is just a start for DLCs. And it's still super early. I mean, we're literally looking at only a couple $1 million of total value at the moment. But one thing I can bet on is that Bitcoin native DeFi is going to continue to grow. And if earning a return on your Bitcoin sounds interesting to you, check out Atomic Finance. Recommend starting with a small amount, just small enough to get started, but enough to get you digging deeper into the tech and how this actually works. That's how a lot of us started in crypto, right? Like we kind of put in $100 and, saw how, oh, okay, more about it, and kind of grew our confidence from there. That's why I usually recommend in terms of folks trying out DLCs and Bitcoin native DeFi for the first time. The one takeaway, if there is one, that I want you all to take away from my talk is that the next time you're considering doing DeFi with wrapped Bitcoin, just ask yourself, oh, is there actually a product that I can use to do this with plain old Bitcoin instead? And if so, why use wrapped Bitcoin anymore? We got to try out Bitcoin native DeFi. Yeah, so that's all I have, Mark.
Thanks, Tony. Fascinating. Yeah, thank you for driving us through the world of DeFi on Bitcoin. I think, and strong case for the wrapped Bitcoin. So we always looked weird to add risk to risk. So thanks for that. There are a number of questions in the chat. I don't know if you want to pick up yourself from the chat, or I can read it if you want. But feel free to.
Sure. Let's see here. GBTC. I'm actually not too familiar. I think that's I'm not too familiar with GBTC actually. Yeah. Casper, do you know? I know you kind of answered his question there. I don't know if you want to chime in about GBTC.
So like if we are talking about like Grayscale Bitcoin Trust, well, that's a centralized party, and actually what you pay there may be very, very different than the price of Bitcoin. I don't know what it is right now, but I think like last time I checked a few months ago, actually they were selling those like 40% below the actual Bitcoin price. So like sometimes you like if you know what you are doing, you can make a big profit, but sometimes you can make a big loss, and it's not even correlated with the price of Bitcoin itself. And they are not native crypto. So GBTC is I think that these are also the guys who like to have an ETF right now.
Yeah, that's right. GBTC is like more or less like a TradFi vehicle that Grayscale spun up to allow for like, you know, folks in the traditional markets to actually be able to, I guess, participate in Bitcoin's price movement and you know, put it in and you know, can put it in registered products like an IRA or what have you, right? So yeah, that's my understanding, but it's a little bit, it is a TradFi kind of product and whatnot. Yeah.
Yeah, the problem with them is they're no longer even like registered accounts, so you cannot buy them from your TFSA or RSP account, so it doesn't really make sense. So it's primarily a vehicle for like investment, investment grade kind of transactions.
All right, so maybe move on to next question. I see Matt already answered the one about the market maker, the counterparty for the sale. So I guess I don't know if you want to add anything to that.
No, I think Matt covered it. Yeah. So we work with a third-party market maker, and you know, moving forward, looking to kind of onboard more market makers to DLCs as well. Still a newer concept, and so basically, like we definitely met some resistance and like, okay, how do we get that first market making partner? It's like kind of a chicken and egg, but yeah, we're really got to have Calypso working with us, and you know, hopefully we'll onboard more DeFi market makers over to DLCs.
Yeah, and the other thing too, I was just gonna chime in. Basically, with DLCs, you also don't run into counterparty risk as well. So you know, these are like smart contracts on Bitcoin, but really, really simple. And so when you're a user and you enter into one of these DLCs, you don't need to trust that you know, your counterparty is actually going to put the funds up. They put the funds up ahead of time. So that's one of the really nice features of DLCs.
Yeah, thanks, Matt. It's great to hear your voice, by the way. Thanks for the response.
Yeah, likewise, Mark.
Yeah. And there's a cherry on the cake, some questions about halving of Bitcoin. Of course, we're going to hear more of those questions as we get closer to the date, but here you can give a crack at it.
Matt, you want to take this one? What do you think will be the impact of Bitcoin halving next year?
Well, let's see. Is it priced in or not? I don't think so. Let's see. So we have 900 Bitcoin every single day that are mined and sold. But most of them are sold by miners, and that's going to go down to 450 Bitcoin. And so, I mean, you know, I think we're going to have a supply shock, and I think everyone thinks it's priced in, but I don't think it is. So that's probably the effect. Yeah, it's going to be, honestly, it's going to be tough for a lot of miners though. Like, I know a lot of miners that are, you know, they're just out there and they're just trying to survive, and they're just trying to manage their capital as effectively as they can. And this is going to be obviously a big shock for them. So I think capital management is going to be really important for miners over the next, you know, half a year or so.
Well, there is another question on the sidechain. I don't know if you see that one. Maybe you want to pick it up, and we'll wrap there with that question.
Yeah, Matt.
Oh, yeah.
I guess question for you as well.
Yeah, that's a great question. So yeah, scalability for Bitcoin. So right now we're doing DLCs directly on chain on Bitcoin, and so obviously there's some settlement time that's required for a confirmation to occur. But you can also do DLCs directly on Lightning Network as well. So you would enter into a Lightning channel directly with the counterparty, so like the market maker, for example, and then you can actually do as many trades as you want directly inside of that channel. So that allows for essentially instant finality inside of that channel. And then obviously there's other alternatives like say Liquid, where you could do DLCs as well potentially, and that would allow for settlement to occur within a minute or so. So I know 1010 Finances, they're doing some cool stuff with Lightning DLCs right now, and that's something we're planning to look into in the future too.
Yeah, thanks, Matt. Thank you, guys. All right, so thanks again, Tony, for the presentation. It was really enlightening. I think it's going to be we have to bring more of those later. Victor?
Sorry, Mark, one more question for Tony. Given what Casper talked about, I have to ask this question. So is your platform, is your protocol being audited by company like Quantstamp or anything? So because you're providing a new functionality that most people are not familiar with, and the obvious question is, how secure is your platform? How secure? Have you been audited?
Yeah, really.
Yeah,
I'll go for it. Really good question, Victor. So basically, DLCs themselves, the actual contracts are actually really simple. On chain, they look no different than a 2 of 2 multisig, and so it's kind of the way that the DLC protocol has been created is kind of similar to how Lightning was created. So there's us, there's 1010 Finance, there's Lava, there is SureBits, Crypto Garage, all these different companies that are basically building out the protocol at the same time. And so we're all kind of auditing each other's code as we go along. So it's a little bit different than what you would expect in Ethereum. In Ethereum, you need a audit because you have so many different functions that would exist in a smart contract. Whereas in a DLC, on chain it's just a 2 of 2 multisig, and then off chain you have some off chain signatures that have to do with all the possible outcomes of what could occur. So really, since it's a 2 of 2 multisig, the only person, say there was some vulnerability, the only person who can actually steal your funds is the counterparty. And that's in an absolute worst case scenario. And even if something does go wrong with the generation of signatures, you can always do a mutual close, just like you do in Lightning Network. So you can kind of think of DLCs as kind of similar to the development of Lightning Network, but they allow for trades to occur essentially. Yeah, hope that answers your question.
Okay, thank you.
All right, so we're gonna move to a break now, and so it's actually an optional break and a community shout out. So if you guys have in the audience, anyone, if you have an announcement like Alex's book, for example, any one of you wrote a book recently, feel free to give a shout out for your book or events or news or projects or ask for a developer or anything. The mic is there, the floor is yours. So you can just take it. We're not that many today, so feel free to take the mic and keep it short. Actually, I have one, so it can give you a little bit of a primer to get you in. So there's a conference. We talked a lot about cybersecurity today, and people like Casper that are expert at cybersecurity like to invite you at a conference in Montreal. Will take place next month, October 25 and 26. We're expecting 5,000 people. There will be ministers, Minister of Cybersecurity for Quebec, a couple of people from the White House as well, good representation across Canada, some of the leaders in cybersecurity. And I'm helping the organizers set up a little bit of a Web3 blockchain scene. So they might, I'm pretty sure there's still space in the agenda. We can squeeze you on the panel or two. So feel free to connect with me, DM me after the call, and we'll get you in. All right, so who's in for the shout out? I see a couple of people coming up on screen. James, do you have something to share?
All I can share is that I've moved from Toronto to Vietnam. So the chart that you were showing earlier about the chain analysis, that's something that I'll be definitely learning more about here.
Yeah, absolutely. Vietnam has been topping the chart. The Chainalysis report is actually free for download, and we'll share our slides after, so we make sure there is a link in there, Victor. And thanks for that. Keep us posted. And what time is it in Vietnam right now?
It's actually 7 a.m. here.
Yeah, all right, so early riser for you. I don't know how you do it, but congrats. Thanks for joining. Is there any other shout out? All right, so I guess we're gonna be on our way then to move to the third talk. And if you live in Toronto, if you've been in Toronto for a while, you probably cross paths with Ash already. So he's been involved in a number of projects, and I'm glad like he took the time to share a little bit what he's working on. So Ash is a seasoned Web3 expert with a track record of launching products from concept to reality in crypto mining and DeFi. And he's currently an advocate for the graph AdvocatesDAO. So he's going to be telling us about this one. And this is the community behind the decentralized indexing protocol. Ash will share the learnings of their DAO, how to drive greater participation and adoption of Web3 via organized community building and meaningful contribution. So Ash, we're going to give you the host. Victor, you can make him the host.
Thank you for introduction, Mark.
All right, you're in.
All right, awesome. I'll quickly pull up my presentation. Let me know if you can see it, by the way.
Yeah, perfect.
Yeah. All right, perfect. Awesome. Yep, so hi, everyone. My name is Ash. So as Mark mentioned, I'm currently advocating for the Graph DAO. So I've been, using the Graph for a couple of community projects that I was part of since 2021. And I just, learned a lot about them and realized that the community behind the project is honestly one of the strongest in the blockchain space. So I thought of joining. And so today, basically knowing all the intricacies of how it actually works from the inside, it's pretty fascinating. So I thought it would be a good idea to kind of share the expertise with the community. And so let's get right into it. A little bit of about myself. So I've been in crypto space since 2016. I was primarily in crypto mining space at that point of time because, well, there was still no DeFi, probably. And, I was responsible for launching the competitor for the S9 miner. If you guys are familiar with mining space, so right now I think it's S19, the one of the most popular ones. Back in the day, it was still S9. So yeah, we launched the competitor for that miner, and gradually I transitioned more towards the Dapp space, working in a couple of companies. And so today I'm product marketing, basically helping companies with their go-to-market strategies, and part of the Graph. Okay, so why are we talking about the Graph in this context? Well, because the Graph AdvocatesDAO is the organization behind. It's the organization. It's basically the span out of the Graph. So the Graph is indexing protocol. I won't be spending too much time talking about it. You can learn about the Graph yourself, but a lot of people refer to it as Google for blockchains, because essentially what it allows you to do is whatever data is on blockchain right now, you probably can find it using the Graph. And the beauty of it is that all the indexing is decentralized. So there is no kind of centralized entity like Google that potentially has the opportunity of like distorting or biasing, the search queries. So that's for the Graph. As I said, they're standing behind the DAO community, behind the AdvocatesDAO, and they kind of promoted that community. The Graph is currently financing the AdvocatesDAO program. So the reasoning behind launching that community was that you know, the way the Graph sells their products is through the, you know, attracting developers, and so big developer support is was needed, you know, all across the border, you know, in different conferences, meetups, and so they've launched this community that basically facilitates the interaction with the blockchain development community, and that's what, you know, the Graph Advocates DAO is all about. So you know, in one sentence, basically they're driving greater participation in, you know, building decentralized community using the Graph, and you know, nurture the ecosystem around the Graph project. So the reason why I'm mentioning this is because they actually, you know, throughout the last couple of years, they've received some great response from the Web3 community, and a lot of people joined. So 300 active advocates all across the world. So as you can see, the whole map is covered with participating members. So it's more than 55 countries right now and counting. And among those members, 100 of them is like super actively engaged in the community. So they're actually like bringing a lot of value to the community, while other, you know, 200 members, they're, you know, spreading the word and helping out here and there. So the reason it's important is because, well, this is a really good success story for a Web3 community. There's strong support. They're actually like bringing value to the protocol itself, and that is why I thought it's a good idea to explain. So how do they actually work from the inside, and what actually drives all those good results? So let's get straight into it. If you only remember 4 things from this presentation, it's these 4 words. So the structure, the components of success of a decentralized community. So you have to have a very clear structure, and we'll dive into what the structure is a little later on. If you want to be efficient with you know, bringing in more members, you have to assign very clear roles to each and every one of them, because people come in only if they understand what is the potential, so what they can actually bring in to the community. So once you've attracted them, you start engaging with them. And so onboarding becomes crucial and very important. You cannot you know, run a successful decentralized community without a very clear onboarding plan. And so we'll dive into what it means. And so the last one is obviously the development component. So once people were attracted by a certain, you know, area of where they think they're, you know, the strongest, so they want to be able to understand. So okay, once I implemented, you know, my knowledge, once I put in my skills into work, what is my development path? What am I? What can I achieve in, you know, 6 months to a year? And so we'll talk about these 4 components individually in just a second. Okay, so the structure. This is a very important one because especially, oh, excuse me. This is a very important one because the structure basically drives, I'm sorry, I'm just keep changing the slide. Anyway, the structure actually drives all the decision-making process, and only when you have, when we're talking about decentralized communities, but even this chart right here, it's fairly centralized, but you have to have a clear structure and responsibilities in order to be able to operate 300 people. So it's not possible to do it in a fully decentralized way. So there has to be some sort of hierarchy and architecture, and thinking behind the processes. And so the way it is laid out in the graph is there is, as I mentioned, the graph protocol is on top of everything. So it's not even on this schema right here. So they're running the show, right? So they're financing the graph AdvocatesDAO. And so the responsibility of for the whole community, so everything that community does is on the graph AdvocatesDAO. It's the regulator entity in the graph ecosystem. And so they have two main functions. So first one is they want to bring in new people and onboard them and make sure that they're successful. So that's the Advocates program that I'm a part of. And so there is also the community grants that anyone can apply for a community grant, and it's going to be the graph AdvocatesDAO who make the decision about whether to allocate funds to a proposal or not. So with this sort of clear definition of what the organization in its as a whole is doing, it's very easy to understand. So where do you fit in? And it's very easy to then explain how people can progress. So once they join the Advocates program, so what's the path to become, a member of the graph AdvocatesDAO, for example, or if I want to contribute something to the community, so how do I do that through the community grants, so on and so forth. So it all comes sort of rolls into this structure. Okay, so now we have the structure. Let's talk about the onboarding now, because okay, so people do understand that, hey, this is how this community is operating. So they probably did a little bit of research, online, and they've learned about the graph AdvocatesDAO. They've learned about the program. So they apply to become the one of the advocate, and there is a very clear process on how the advocates are selected. So once they've been selected, it's very, very important to provide them with all the necessary resources to be successful. Because a lot of times, and I've been, a member of multiple different communities. I've run, Web3 communities myself, and a lot of people, they get excited when they join the community. And so the moment that they join, they just stop doing anything because they just don't know what to do. So they don't have a proper guidance, and that's where the onboarding is so very important. So the graph's using a tool called ClickUp. So you just log in. It's a very clear list of things that is divided by the role, and we'll talk about the roles a little further on. So you sort of put in all the resources for people in one place, and you just make sure that also there is a process behind them going through all those resources that you've put in. So essentially, the way it works in the graph is the following. So you kind of select the role, and then you participate in a monthly call for that particular role, but where they explain the contents of all these onboarding plans. So very kind of clear path from the get-go, and that's what makes things very like smooth and easy for new members to come in on board. The development path. So once you are a member, so you might already contributed something. So like speaking at the event counts as a contribution. So putting together an article, it's a contribution. So speaking in front of a developer community and describing some more technical aspects of the graph, that's also counts as the contribution. So once you've done this, how do you actually progress? And so with the graph, the progression path is the following. So first, as you can see, you submit the application. So there is a review and interview process that you go through. You become the Advocate program member. So you start contributing, you earn community reputation, and then you can become the DAO member. So what basically the main difference between the Advocate program and the DAO program is that, in the AdvocatesDAO is that AdvocatesDAO, they make the decisions about the interview process. They make the decisions about allocating community funds. They're basically running this whole thing. And so the community members, they have one vote in the AdvocatesDAO, and that's what differentiates the Advocates program and the AdvocatesDAO member. So you have one vote in this community, and you can also earn compensation for your contributions. So there are some members that they only vote in the DAO, but there are also members that contribute their skills, their knowledge, and so they earn compensation for doing that. So at this point of time, I mentioned that there is 300 members, and out of those 300, 28 are a part of the Graph AdvocatesDAO. So that's it for the development path. So as you can see, like, this is actually something that you learn even before you become the Advocate program member. So people know what they can count for, in 6 and 12 months from the get-go. So even before joining the actual community. And so now we'll quickly go through all the roles, and well, I believe that it's a very good way of separating different functions, especially in the Web3 space. That's actually the majority, the majority of tasks, they fall under either of these 5 buckets. So we have the event evangelist. So what I'm doing right now is exactly that. The content creator, text translator, community care, and technical teacher. So we'll briefly go through all of them one by one. So essentially, event evangelists, they represent the graph at meetups, conferences, events. So sometimes they travel around the world and give presentations about the graph where it's possible. And so that's how they kind of contribute to the ecosystem. And sort of like the side thing of the event evangelist is putting together presentations about the graph. And so that's pretty much it for the role. so the content creator is, self-explanatory really. So you either create, articles, blog posts, stuff like that, or, social media posts, and that's your contribution to the ecosystem. Text translator. So obviously when you launch a decentralized community, you get members all around the world. So you have to be able to support multiple different languages, and that's where the community, helps a lot, because there is just simply a lot of content that needs to be translated into different languages. So having people from all those different geographies helps a lot. So community care is just maintaining, just keeping lights on, really. So I know these guys, they're responsible for like tool sets that the community is using, and making sure that everything's working properly. The social media, the resources are in place. Whenever we need to launch like a new onboarding kind of thing, so that they're helping a lot with that. So that's pretty much for the role. Technical teachers. So they're more, these guys are more technical. So they either have, a development background, or, spent a lot of time in the graph ecosystem, and can have like pretty in-depth technical discussions with developers. And, their goal is, their main, responsibility is to make sure that whoever's using the graph as a tool, they have a very clear path, and it's straightforward for them on how to let's say launch an indexer, or change the schema, or stuff like that. So they're helping developers with those kind of questions. And yeah, that's pretty much it for my presentation. So if you guys so I'm pretty sure some of you will want to launch their own decentralized communities, or would want to kind of use the knowledge and maybe the structures, the approaches from the graph for their own projects. But some of you guys are looking for an opportunity to join decentralized a good project in the Web3 space. So feel free to look up the Graph Advocates program and see if it's a good fit for you. So you can learn more about the Graph and the Advocates program in Telegram, in Twitter, and my handle is also right here in case you want to connect, or have questions. Feel free to connect. Thanks a lot for your time, guys.
Thanks, Ash. It was a great presentation. It's good to have projects to engage the community. We had a number of those over the years, and we also got a session on the graph. Can't remember exactly when that was. Maybe Victor will remember. But it's good to have a little follow-up, and also knowing there's support for the community behind, or using also community of users of the graph. So
yeah, I know the CEO of EdgeNode, Tegan, spoke at your last event. So the only thing we have in common with Tegan is that our hair is dyed. So
it's a good starting point.
Yeah.
All right. Any questions from the audience? Ash is here, so he can answer any doubt, any questions, anything, any thoughts?
I think everyone's tired at 9 p.m.
Yeah, it's getting late.
Yeah, it's only in Vietnam that is, people are still ramping up.
It's probably eating some eggs and bacon at this time.
Yeah, probably. Hey, James.
Hey, I'll actually get my wife to apply as a text translator. She's
Nice.
fluent in both Vietnamese and in English, and spent 10 years in Canada in the work culture as well, so understands that part as well, and has a finance background.
Yeah, that's fantastic for sure. You know, if feel free to, you know, let me know her name. I'll just you know, make sure that her application goes to the right hands.
And you guys have Ash's contact information. This talk is recorded, so obviously you can rewatch it as many times as you like. There is also a public chat. So we have a Telegram group. Find us there. It's called DeFi Toronto Public Chat, and you can continue conversations with the speakers and take it offline for personal chats later on. So. I see that Victor is here. Victor, you always have some great questions. Do you have one for Ash by any chance?
Not particularly. I was just thinking about DEF CON, which supposed to be announced soon for this year. They don't have DEF CON, but next year there's rumor that could be in Asia, and Vietnam could be one of the you know, possible location.
Yeah, so everybody keep James contact info, you know, at hand, just in case we need someone on the ground to navigate.
The proposal for Vietnam is for actually an island called an area called Nha Trang. There's an island there. They're looking to basically use all the hotels and turn it into like a crypto island for the conference.
Wow.
Beautiful islands in Vietnam. Is that those islands with the rocks in there? Is that the one or different?
It's more to the south than that, but for reference, I've been to Nha Trang. I went there after spending 4 months on the beach in Thailand, and you just spend enough time on a beach, you become normalized to the feeling of it, and it was still stunning after going to Nha Trang. It's probably one of the most beautiful places I've ever been.
Yeah. All right, well, that's very interesting. So, and Victor, I thought you would be asking something about education in relation with the graph, and Ash, I'm sure you would be welcome in some blockchain programs also around here to let some people connect and maybe volunteer to some of or be part of the DAO.
Yeah, for sure. If you guys feel like, you know, your skill set matches with one of the roles, feel free to, you know, connect and see if you know, the graph advocates path might be for you. So I would be happy to you know, weigh in and after, you know, a brief conversation. So feel free to connect.
Wonderful. So I think, thank you again, Ash and Casper. I know Tony had to dash out. We had Matt as well, was working with Tony. And thank you everyone for your time making this community as awesome as it is. So stay tuned for our next meetup, which should be in person. We're actually checking the date with the organizers. Should be at 1/11. So we're planning to do it October 19. But stay tuned online. Make sure we are reconfirming with the location at this point in time. Also looking for a couple of sponsors. Also, we have some lineups. We can always need some help when we do physical events. And Victor, did I cover everything? Do you have some parting thoughts for today?
No, you cover all. It's great, and you know, again, thanks Casper, Ash, and Tony for speaking to the community, especially you know, it's late, and for those who stay until the end, I really appreciate, and I hope we all learn something from our speaker, and will continue push for for the adoption and development in this area on our Telegram channel.
All right. Thanks, everyone. Have a good one.
Awesome. Thank you, guys.
Thank you.